Good morning, everyone, and welcome to the European crossover webinar. And we have seen the indices continue to go on and rally, and they will go on and get a pullback, and then we rally, and then we'll get a pullback, and then we rally, and we get a pullback, and we rally, and then we get a pullback, and then we rally, and the song just keeps going on and 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 on again. Sounds like a broken record, but essentially that's what we've been seeing. I'm trying to think of the right word, but we've kind of, crunched this data, but we've seen that where we get a little bit of rally, we see a pullback, rally, pullback. And most recently, you can see here where we've made it all the way up here to 18 before pulling back all the way 6, only to come right back up here again and take it out by just a bit here at 19, and then come right back again. I didn't even see this right here where it actually, the time where it actually rallied on up here to 18 before pairing back 12, and then reasserting itself back up to rally 14. And here we are. The next stopping point that I see here is going to be that 3026 that I had mentioned before. We're actually pressed up against that 20, which we have already before, but is right here at 3026. And that was the previous high before we went down. I mean, because we had already dipped here. So they're at 3026, but the way this market keeps rebounding back up, it certainly looks like there's just, you would think, it would appear that there's even more to this move. Especially with the way, like I said, we've come back, is that you almost get the feeling that you're looking for a strong, massive blow off at this point, because we keep coming back up. Is that, and I have to think, and I'm surprised that we've even come back up here, is that, come back here. Sorry, I was cleaning my glasses. We made this run yesterday, excuse me, and you would have thought, and then we saw that big pull off with the announcement, pull off or pullback, with some potential actions against China and so forth. And I had actually mentioned that earlier, much earlier in the morning, when I said the risk is there that, it just keeps, even though whether or not you believed it or not, is that the salvos keep, increasing. And certainly, like I said, we've seen that. And you would have thought that would have been enough to essentially, certain lack of a better phrase, sunk the ship with the move that we saw yesterday. And that would really put quite the dent here. And we rallied up a little bit, came back down. You would have thought, okay, well, this is it right now. That'll squeeze it as far as it'll go, which we did see a pullback. But then we saw this market reassert itself on the Japan stimulus program. And you would have thought you really stopped out a lot of people, which in fact we may have. And the market even took a pause right around here, this 3009 area here. Can't see it here, but we actually took a pause at the time. And then here we are, once again, reasserting ourselves here. Okay, you would have thought that had been it. They really made it up here. They really squeezed everything they could out of everybody. And then they come back again. And then this will be it. That'll be its last hurrah. But lo and behold, here we are back again. Impressive. We've seen similar moves here in NASDAQ, but not as great. You can see here the pullback in NASDAQ has not been to the same extent. You can see here, this is what we probably would have expected here. after that fall. So look at the big difference here. 5-minute NASDAQ, 5-minute SPOOs just keep going on and on. Now, NASDAQ has been the one that had been with the most strength this prior week. So whether you want to say it's playing catch up now or not, but to me, the one leader has been, which I was saying since yesterday, has been the Dow futures. And that's been the real tell story. And one of the things that I was using yesterday is a hint as to where the market would go to, or when the market would run out of gas. Because yesterday we weren't, and Nasdaq remained weak yesterday, but the Dow remained strong, and that really kept the SPOOs bid, and that's what I was focusing on, was the Dow futures here. And so certainly you can see we had a pretty good run there. And we've seen the similar thing here happen also in NASDAQ. Not NASDAQ, I meant to say Russell here. You can see that here. Same thing here. You're seeing, although to a certain extent, the moves have been even greater here in Russell, because unlike the SPOOs, good example here, you can see we've seen a pullback down, but you can see right here in the SPOOs, but you can see here that the pullback in the Russell has pretty much stayed bid, but when we saw the pullback here, it's not been as strong as in the SPOOs. The stronger of the bunch has been obviously the Dow, but if you're trading SPOOs, and you really need to be paying attention to the Dow futures, and you can see here, we've really kept this up. You can see here we're actually even just below the highs. You can see here we're still scooting up here to new highs. So it's the Dow, the one that you want to focus on, and as to where this move may push us, it's really, you have to rely on that. And really, there's nothing here until we get up here to 677. Right there is 25,404. That's still another big jump. Right there, see? And then maybe just a bit right here. But there is some significance, but not as great, which would be 25,218. There. Which we're just about there right now. You can see that. Right there. We'll see how much further we can go beyond that. But once again, the thing you have to worry about here is not only you look at the Dow, and that's more of a telltale, but do we see something where we just get a real blow off top and we go past 3050, clean everybody out? And then, I mean, this thing doesn't suggest any type of, that it's run out of gas. It just keeps coming right back. So really a tough one here. Obviously, I don't think we'll know until we get into the cash equity open. Today we do have some Mexican jobless rate data, Canadian building permits at 8:30 Eastern, Richmond Fed Index, which is a third tier uh, piece of data, Texas Service Outlook, Dallas' Service Outlook, and that'll be it. So with that, let's just go into the news. So the Australian New Zealand dollars hold near multi-week highs as the economies open up. The Australian New Zealand dollars held near multi-week peaks on Wednesday amid hopes the world economy was past the worst of the coronavirus shock, even if it might take many more months to fully recover. The brighter mood showed in rising equity and commodity prices, along with a big surge in Australian bank stocks as investors piled back into beaten-driven sectors. All of which helped hoist the Aussie, having jumped 1.7% on Tuesday to its highest since March at 66.75. The same mood was seen with the Kiwi after climbing 1.6 Tuesday to 62.28. As Australia loosens its lockdown, timely data are shown as picking up in everything from debit card spending to restaurant bookings and holiday inquiries. Hayden Dimes, an economist with ANZ, noted internet searches showed the fear and interest of COVID had subsided. With regional travel in most states either allowed or soon to be allowed, people are thinking about traveling, said Dimes, searching for Melbourne hotels and Sydney hotels lifted quickly in recent weeks. Mobility tracking showed more people venturing out, while internet searches for unemployment benefits had returned to pre-crisis levels. That leaves a flow of official figures looking decidedly dated, with the latest numbers out on Wednesday. Coming to construction work done in the 3 months to March, those showed a 1% drop in the quarter, slightly less than the forecast. Likewise, gross domestic product report for the first quarter due to the week could seem resilient on the surface, even as the quarter is likely to show the largest contraction on record. And the dollar gains, yuan takes a hit as Hong Kong simmers. The dollar edged higher on Wednesday as worries about the U.S. response to China's proposed security law and renewed protests in Hong Kong supported safe haven demand for the greenback. The yuan slipped to its lowest level in nearly 9 months, about increased tension in Hong Kong. The euro eased slightly ahead of details from the European Commission of a financial rescue fund for the bloc later on Wednesday. Some investors are betting on a resumption of business activity throughout the crippling coronavirus pandemic that brought the global economy to a standstill, but others worry the threat of the U.S. sanctions against China for its treatment of Hong Kong could easily worsen risk yet again. We're in a broad risk-on trend, but the only thing that can have change is as U.S.-China relationship. More problems between these two countries would slow the dollar's recent decline potentially lead to a dollar bias fresh haven, safe haven. The dollar edged up to 23.20 against the pound and 9.58 per the euro. The Aussie to 66.42 and the Kiwi to 61.95. Many of the places that were hit the hardest in the pandemic are now allowing more businesses to resume operations. Trump said on Wednesday the U.S. will announce before the end of the week its response to China's planned security bill for Hong Kong. We are approaching half year and the traditional dividend payment season. Normally such conversion would kick in later. Yuan depreciation expectations were up again. Beijing has expanded the scope of the draft of national security legislation. U.S. and China repeatedly clashed over the trade policy. Another row between the two world superpowers could prompt a return to risk-off trades that favor the dollar gains and declining equities and rising bond prices. The European Commission is set to present its proposal for the Economic Recovery Fund later on Wednesday, which could set the tone for the euro. And the morning bid, which is pretty short now. They used to be a little bit longer, a little bit more lengthier. But stocks rally on as Hong Kong protests flare up. Chaotic scenes erupted in Hong Kong's financial center as new protests flared up over Beijing's proposed national security law, a reminder to the markets that China and the U.S. are apparently back on a collision course. Trump said on Tuesday the Washington was working on a strong response to China's path with measures to announce before the end of the week. The latest development set the yuan to its weakest in 9 months. On Wall Street, the S&P couldn't hold 3,000 points, but futures are currently trading at 3,014. Well, now we can see 3,017. Safe havens are getting back into play. Eurozone government bond yields edged off to Tuesday's highs. The dollar climbed in commodity currencies and sterling traded weaker. The euro slipped after sharp gains on Tuesday's investors geared up for a big day for the policymakers in Europe. That comes following a debate of what shape such a fund should take. After the Frugal Four, Austria said, Netherlands, Denmark, and Sweden made a counter-proposal for the Franco-German plan from last week, pushing for loans from a time-limited fund to nations struggling to recover from the pandemic and rather than grants proposed by Paris and Berlin. So with that, let's just go and move into the analysis. Bear with me. So it says the euro posted a solid gain on Tuesday, closing above 9.80. Resistance on Wednesday will be 10.21 with support at 9.14. Well, we're trading rather tight day right now, but should see some fireworks later on. So 10.21, 9.14. Move on to the cable. So cable saw a surge on Tuesday after taking out recent shorts. You can see, boy, we did clean out some shorts here. Look at that, jumping over the last few days. Actually, the last 6 trading days appears. Look at that, best closes in a while. Look at that, really best closes in almost 10 days. But anyway, cable surge on a surge on Tuesday, taking out recent shorts. Resistance will be 2408. So we've really gone, look how dead we are. We're completely dead. This market just stopped dead in its tracks. We're supported 2244. So we are absolutely dead in the water here. So hang on. What a big change. And let's go move into the Aussie dollar. So the Aussie rotated. Well, that's not correct. That was not. I don't know why I didn't save that, because you can see here. What my take was, the Aussie blew out all stops here, and we actually came up to challenge at this level right here, which is 66.83, and our resistance was going to be just this next level above here, which is going to be 67.04. So I don't know why I didn't save it. And support was going to be right there. That high right here, this closing, 65.96. Let's move on to the Kiwi. Why the hell this thing didn't save up? What the hell? Well, we had the same thing. And I put on here that the market challenge is 62.05. We didn't close above it, but the resistance that actually gave a little bit more room for the resistance was going to come in. You see this low here? That was going to be for today's resistance. So I don't know why I didn't save the information, but it's going to be 62.42. And support, same thing here is going to be right the dip back here. If we see that, but we have not paired back. Hardly at all. 61.44. I don't know why the F this is not saving. Hold on a moment. I didn't write all these notes just to not even use them. It's just a bunch of BS. So hang on a moment. So the dollar CAD broke down on Tuesday, taking out 38 cents on the close. Support will be 37.21, and although we're trading in a very tight range, 37.21 with resistance at 38.51. Boy, we are just absolutely dead in the water. Can't believe this. So the dollar peso held buys chart support overall at 22.12, consolidating at the lower range. Resistance will be 22.48 with support at 21.89. But like once again, we're not even moving anywhere. We're just dead in the water. I don't even know what the heck's going on with the FX. But it's going to be 22.48 on the resistance side, and allowing for this to pare back a little bit. 21.89. But that 22.12 held up very well. I mean, the low was 22.09, and it's held up overall. Let's go move into now to the dollar yen. So the dollar yen continues to dither in a tight range. Resistance will be 780 with support at 720. So it's just going to be just a hair above this 778. And 720. We got that level up there. Remember I was showing you on the Dow, and the Dow started to break down a little bit, and in turn the S&Ps are 3,015, and the Dow was struggling. Remember with that 25,218, we got up as high as 25,243, and the Dow had pushed just a little bit higher. Now it's at 3,015. Maybe we see this weaken a little bit further. Something to keep an eye on. Let's go move into the cash dollar index. So the dollar index broke lower, closing at 99 even. Immediate support will be 98.76 with resistance at 98.48. And like as I mentioned before, FX is just absolutely dead here, at least with the majors. And that's going to wrap up the majors. With that, we're just going to move on into the cross rates. And we've seen this market continue to keep its bid up. I mean, we had a good close yesterday, but you can see here still pushing higher here. I mean, we've really, to me, it seems like we stretched this rubber band pretty far. I'm just actually just going to go with the highs from yesterday. I'm not even going to give it the benefit of the doubt for this upper area here. So let's just go with yesterday's highs, which is 66.98. I guess might as well just call it 67 even. And support, we're just going to go with this previous high, which is just below that one high, which is going to be 66.16. Pretty good move already at this point. Looking at the euro yen, we're just going to go with right there with that level, which I think probably was yesterday's resistance, which was 1816. Well, actually, we had 1852. We did have resistance yesterday for 1852. It didn't quite make it up there, but we've already had a pretty good run here. But certainly the euro is going to be impacted with what's going to be happening today. So I tell you what, we'll just go with yesterday's highs, which is 1834, but we did have 1852. We'll just go with the 1834. And support is just going to be right there at that high. Keeping it pretty tight, which is going to be 1754. Well, we had 1753. We'll just keep it the same. Let's go with euro odd. This market still continues to be dead money. This market couldn't save itself for nothing. Look at that. So no changes here in euro odd. And we'll just go and move on to euro kiwi. And this market continues to still weaken here. And we're just going to go with the level just below. And it's still relatively quiet at FX right now, but it's going to be 75.98. These Antipodean currencies still continue to remain strong. With the upside, you can see they barely just made it right here to this level, but we'll give it a little bit more room, which is right here. This low here, right there. It's going to be 77.94. And moving into the Aussie yen. Still powering higher here. And just going with the levels. That's it. Just going to go with the levels. And you can see right here, right there, that level, which is, I'm sorry, right here. Let's see where that confluence is with. Oh, yeah, that's a pretty key level here. Look at that. 71.89. And support's just going to be right here at this high. Right there. Which is going to be 70.78. And let's go and move on to the guppy. Well, it looks like this market tried to wake up a little bit out of its slumber. We did close up here right at this just above 32, and how much further it can push here? It's going to be right there, the close right here in this bar, right there. And that's going to be 33.24. See whether or not we can, it's a pretty good run if we can get up there, but maybe we can push it just a little bit stronger. Maybe not today, but by tomorrow, 33.24. If we can keep the upside momentum going. And support's going to be this high right there. 31.79, because when you're paring back, anybody short is going to be looking to cover, and you'd be looking right there. 31.78. And lastly, let's wrap it up with sterling odd. This market just, well, I mean, these antipodean currencies are so strong, so I have to think you have to go with the technicals. Obviously, it's a huge key area. We'll find out where we can make a dive down there, which is going to be 84.33. And right there, you can see resistance. This close right there, 86.04. Yeah, that's going to cover FX. I mean, it's pretty quiet, with the exception of the Australian and Kiwi pairs. You know, I'm probably sure you can find some other pairs that would look like they're moving, but to me, it just looks pretty much dead. Not seeing any real action across the board. Things are just really quiet trading. Taking a look here with crude oil. Still remain pretty strong. Hasn't been any real give back. And with gold here, still under some pretty good pressure. Here's some key support coming in. Actually, that's some good support right there. Here at 16.98. You can see even a little bit of a gravestone, not gravestone, I mean a little mini hammer. See if this market can't pick itself up. And we're still seeing the SPOOs. They've actually had done that quick dip to 30.14.5. They've jumped up as Dow's made another push higher. Here. You can see that right here, making that push again, and in turn, Dow leading the charge. So once again, this is the market. It's the Dow that's actually driving the bus right now, and was driving the bus yesterday. So keep an eye on that. That's actually designated. When the Dow just made this quick little pullback here, we saw the SPOOs drop down to 3,014. Look at that. Just quickly sell off. And now here we are reasserting itself as the Dow comes right back. But that's what we have. I'll go and get the bias chart posted. Thanks for joining us here on the European Crossover webinar.